The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Wednesday, the 3rd of September. We've got the Dow down 202 at 45,093. It's got that H pattern, the dreaded H pattern. We'll see yesterday it closed above the left side low. Today, so far, it's under that left side low. Work in progress. We're looking at the S&P. At this particular point, the S&P is up 20 at 6508.23. I'm waiting for this to resolve. I don't see any other way than this is a PC. I could use a technique that I use just once in a while, and it is a specific technique, Chapman wave technique, only used certain circumstances, and it's to resolve something. And what it does is, if there is like a peak A and a peak B, and then instead of going to a peak C, it just fractionally goes underneath that peak B, and then later on goes to the real C, I have to look at it and say, I had a rally in the technicals, that's the on-balance volume, the MACD, stochastic, and then there was a little bump right there, so I could use it. Everything about this is 6508.23 on the, that was on right there on August the 28th, suggested that there was going to be a turn down, but the turn down is still, it hasn't taken out the left side low. So I'm just leaving it as it stands. I put this in pink just to say normally that's what I'd be doing, to say that there's a phantom peak. I sometimes do that in the futures. And then that would be a D, and then everything resolves, because what we've got is the Dow, the Chapman wave notation, has gone to a peak F/A, but it looks like an F right now. The QQQ has gone to a peak G. I still have it as a GA, but it really looks like a G. Everything about it looks like a G. The IWM has done very nicely, but it has gone to a peak E. So it's only the S&P. And even the SPY, look at this, here's the SPY. It had just like a fractional lower high. So everything about this suggests that could be a D, and that would be permissible in the Chapman wave methodology. Remember, you can't form fit your technique for every nook and cranny, every trough and peak. No, this is a specific time with a specific reason, with the warning, with the preemptive to say, hey, I'm using this as a phantom peak. It's not a real peak. I usually do that if there are parallel highs, but not when there's a fractional low one, except on this rare occasion. So I'm just saying that's the way I'm looking at it right now. And with that said, let's go to the IWM right this moment. It is up 51, up 48, 234.33. Nice, very nice action, but the 9-period moving average and the 14 are still rallying and still strong. So this turns out to be one of the technically better daily charts out of the key indices. Look at the SMHs. SMH is now up 38 cents at 286.86. But there was a peak G at 302.98 on the 13th. Round number opened the very next day, comes plummeting down to the 280 level, rallies all the way back up to 300.78. So it's underneath the 302.98 level, arches over, and for 2 days now, the 9-period moving average has gone negative. And yet, with it all, it's still within the rectangle formation. It hasn't broken decisively below the low of the 20th, which was 281.15. And if it does take that out, then the next level of key support will be right there on the 1st of August at 279.19. All right, and as it stands right now, we've got a peak C in the weekly chart. Now let's go to this, which is, I think, it's going to be quite telling, because NVIDIA, which I almost shorted the other day. I mentioned it to subscribers. NVD, which is a 2 times short, I was about to get it. And then I thought, you just don't know in this environment where sudden bursts of energy. We saw that at the end of the day yesterday, even following through to there, up 20 points, 22 now in the S&P. As long as that residual strength just keeps pushing in, it means that you've got these pop-ups that can, change the pattern very quickly. So as it stands right now, NVIDIA took out the 168.80 August the 1st, I think it was, low, and it went yesterday to 167.22. I think that this is saying to me that there's a really good chance that NVIDIA is going to take a breather for a couple of weeks. It's already had, since the 12th of August, it's already been 2 weeks. This is the 3rd week. So I suspect it's going to go a little longer before it makes an all-time high. And that's the way I'm looking at it. And a question, I don't know what the question was about NVIDIA, but all I can say is I've been talking about it for some time, saying that I'm anticipating that there's going to be a rest period that is a little longer than most people anticipate, number one. And number two, it's going to be... This is the period coming up where a lot of other companies that have come back as challengers to certain parts of NVIDIA. So there's a little competition and a little bit of strife, I think, coming up. Nothing serious. You look at this weekly chart and say, what are you talking about? 86 to 184? Big deal. Yeah, I agree. Big deal, but it will pull back. It'll take time. That's all I'm saying. So now the other thing I want you to go to is, did I miss that? I think I did. I don't want to do it now in the middle of the show. You see this 200 period moving average in the 5-minute chart? After this very quick peak D right here and a peak E in the 10-minute chart all the way to 64, 60 level, just under that, and now we're pulling back sharply. This is going to be a very interesting session. So let me just finish up this particular area with the key indices. Look at the way the XLK, this is the S&P Select. I didn't mean to do it there. That's the very short-term chart. I don't want to do that. Yeah. Okay. Just let me remind you, this 5-minute chart on the 5-minute chart, 200 period exponential moving average. Look how it became incredible support all the way through 1:30 this morning to about 3:30, and then it rallied peak A, B, C, D, E, and then an F, turned around. Look how the MACD deflected low. Look how the stochastic couldn't hold 80%, very negative, pulls back. And where is it now? On the 200 period moving average, having tested it 3 out of the past 4 10-minute sessions. Well, it went before. It went a little low and then it rallied sharply. This one has a different look to it. It's not a rising MACD or a stochastic. This is a fading one. I think that this is going to be a very important moment for this particular part of the morning, because 10:20 in the morning we start to see the other buyers and sellers come in. There's a whole bunch of new people, new players in the market. So as it stands right now, let me go back to this. I just want to show you the bonds. So the bonds are rallying some, almost a point. That's a good sign. So yields are coming back just a little bit. I'll be back in a moment. Basil, Chapman, conditions out. Dow's down 217. S&P's up 13. Little divergence there. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Folks, we're back. Look at the IWM. This is the Russell 2000. I wanted to just go through this because there are a number of people that had got into it as a trade earlier on, and then as some got into it as a position for a chunk of 2025, thinking that it should go to higher highs, and therefore they wanted to be in a position. So look at this. It's holding very nicely here. And as a result, this 9-period moving average, which is at 233.13, and the 14, which is at 231.56. Basically, what we're looking at here is that it is almost at a recovery high, 237.02, so it's just 3 points lower. The MACD is very strong. The 9 is way over the 14. The relative strength is pulling back a little bit, but it's still pretty good. The MACD is still very nice in terms of the distance between the 9-period differential, the green faster moving average, and the 26-period moving average, the red one. The stochastics at 87%, that's really good. And the on-balance volume is kind of weak. So overall, in the daily chart, everything looks very strong. And the weekly chart, it's exactly the same thing with the stochastic at 92%, even stronger. The on-balance volume is a little bit overbought here. So I wouldn't, I'd go with the position that we had earlier on. It was about a week or so ago, and I said, yes, looking very good. The big spike that we saw on Wednesday or Thursday, I said, take a little bit off, money management, but so far it's looking very good. And I'm just going to say, if it closes under 230 by Monday a week, this coming Monday, I should say, that's going to be, that will start to impact and affect the the candle of the 22nd, which was 227 was the low and 235.42 was the high. So I'm just saying so far this is acting very well. And that's the reason why I think this is very selective. Not everything is working in unison to go to the weak side. And not only that, you don't get major sell-offs until there's bad news. Bad news permeates the market, and you start to see 58 to 62 down in the S&P, 420 to 475 in the Dow. The NASDAQ just takes it on the chin, down 275 or 300. And then it needs to follow through the next day and the next day. And then all of a sudden, what was just a small print becomes a really big pica, or that's what they used to call the font size. And it becomes the entire front page has this big 3/4 of an inch printing saying whatever it is, tariffs or Fed or whatever it is. And we don't have that yet. And I'm just saying it's working its way towards that, but I still see too many positives. And yes, we do have a short position, the short positions in the S&P, little split position. So far, it's a little bit under, but I got it because I wanted it both as kind of insurance, because we have so many long positions and some of them done very well, and some of them we're anticipating are going to pull back a little further. And at the same time, we want to get into positions, but we're having patience, and it's really important to just keep your cool and try to balance things out by saying we're having almost all long positions, and we do have some insurance, which will become a trend. If the Dow, which is down 128, by the end of the day, if it comes back to minus 45, that'll be really good. But if it actually expands and it closes down 275 or more, and the S&P actually goes negative, then I'm saying there's a chance that towards the end of the week we start to get some news, some theme, and we haven't got the theme yet. All right, with that said, a couple of questions have come in, actually quite a few, so let me just go on. Basil. T. Oh, new position, T. Well, I had that on my list. In fact, I got it. It's number 1 on my list to review today. Why? Because telephone, it can give you capital gain as well as dividend. If there isn't capital gain, it's capital pain. I do not like to get, and I've watched this for a long time. I did miss it. There were absolutely, I spoke about it about a month and a half ago. It was in the 25 area, 20, even in the 24s. I said, I like this very much, but I felt so convinced that there's competition and people are cutting the cord and all that, and yet telephone, Verizon, T is the symbol, VZ is the symbol for Verizon. All have done pretty well. Comcast, CSA, I think it is. Yeah, peak A, peak B. Yeah, this is the weakest of all. Oh, I see. It's all notated. Huh? This is the weakest of all. Not all, because T-Muz. I remember these symbols. I don't always remember the name. T-Muz. Yep, T-Mobile. T-Mobile's done really well. Out of the ones that you've mentioned, you've asked me about Telephone Zip. I'm going to talk about Telephone, but I think that T-Mobile seems to have the edge on the others. Certainly in chart pattern. Let me just go back to Telephone. Yeah, certainly in chart pattern it had. But here's the thing. If you look at Telephone, let me just show you. Let me open this up so you can really see it. Here we go. So look, here's Telephone. Oh, it got spun off. Something got spun off. So you can see these letters. These letters are all where it was. So now it's much lower than that. So this becomes the price that we're looking at right here. That was the high, 33.13. It's trading at 28.60. So it's underneath the previous high. Over the last, let's just say the last. Was it 2 weeks? Yes, since the August. No, it was 26th. Something was there. 23rd of July. The 23rd of July, 25.85. Telephone has had the better pattern altogether. So now let me just go through it on a purely technical basis. Monthly chart, leg C. Weekly chart, peak D. daily chart, I use this as a phantom peak. This is exactly what I was talking about before. So you see this price here of 29.15 on the 18th, and then on the 19th it's 29.16. So what I tend to do is if I get a little hiccup in the technicals, which I did right there, then I tend to say, you know what, I think I can use that as a phantom C, but I must indicate that I've done that, which I did by changing the color to pink. And the previous peak D was lower. This is higher. So I said to myself, okay, let's see if this can go to a real D and what happens after that. Well, it did go to a real D at 29.65 on the 22nd of August, and then it pulled back pretty sharply, well, just in terms of the pattern, pretty sharply to the 20-ish area, and then it popped into peak A, B, and now today is arched over. So this could become the pattern that I talk about a lot, and that is right here, the dreaded H pattern. Look, come down from a peak D or higher, pull back. Look, this made a little arch pattern. That's that arch pattern. Fell to peak A and went down to low lows. This has gone to peak A and a B and it's turned down. So if this pattern is going to work, it'll take out this left side low of 28.21. And that says you've now got a short-term top in place in the daily, not the weekly. So I'll come back to it and sum it up when I return.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi folks, we'll be back. So telephone, AT&T, trading at 28.57, down 50 cents. So, as Zip said, I just started a new position. If you've started a new position, that's not a full position, I'm very comfortable with that. I do believe that over a period of a few weeks, there's a chance it could test 27.50 to 27. If it goes under 27, it's at 28.50 right now. I think that's going to be a problem. And that just says that it could go a little deeper. But so far, the 9-period moving average is way over the 14. The same thing in the weekly chart, but the weekly chart has a slightly different pattern because it's got this large rectangle. This is a small rectangle which is arching over. So I like what you've got. I like it very much. I still believe it'll go to a leg D. In the monthly chart, it's at a peak, a leg C right now. If it goes to 29.66 anytime in September, the whole of September, if it gets there, it's gone. It's extended leg C, and that's very positive. So I like it. So my whole thing is that you don't want to buy a dividend stock for the dividend and then see the capital. Look, if the capital goes down 4%, that's 4% of your capital. If you're getting 4%, let's say, or 3.8 on the dividend, that's just the dividend itself. You've got your capital. So that's the reason why I say, that's why I've always spoken about Exxon and CVX, Chevron, because if they start to move higher, you can get capital and you can get dividends. The same thing with the communications, the same thing in the telephone companies. But the difference is that on a short-term basis, it's starting to stalling. It's just getting harder and harder to break into the 30s. Therefore, I'm saying just be a little careful. Okay, I do like it. I'm a little concerned that if it goes to 27, that's a point and a half. You've kind of lost your dividend right there. So I prefer where I'm seeing a rising trend rather than a stalling trend. That's my point. Okay? Just think about that. Looking out, if you're prepared to, say, I'm prepared. I think it's going to go to the 33, 35 area. That's something completely different. Then you're going to put up with some kind of a little bit of pain as the dividend holds, but the price goes lower. If you're not selling, that is. Okay. Question came in here. Basil, you mentioned the other day in your market overview, I couldn't remember if it was 3 L's or 3 I's. It's very interesting because it's 1, 2, 3. It's 3 I's. It is Information Services Group. It assists in libraries, networks, hosting, websites, etc. Monthly chart gone to a peak. E once was up in the 9s, slipped down to the just under 3. Now it's at 522, and you've got the weekly chart. If it goes 1 penny above this high right here, which is the week of the 11th of July, 528. If it goes to 529. Oops, am I going to 529. Doesn't matter when. If it goes there before it breaks under 450, that's going to be a G/C. And I'm inclined to lean towards the C. And the weekly chart is in leg C, having made a high back at 528 on the 8th of July. And today's high is 524. It's almost the in leg C. I drew this pattern. I wanted to get it for subscribers. We were just busy with other things, and I just had to let it go. One of them, of course, is that IREN. I still got to figure out how to pronounce it. And that's been absolutely fantastic to us, but I do think it's going to get a little choppy right here. So this has gone left side, right side price, time match perfectly to the, it's 1 day early. And the price that I'm looking at is 528. Today's high is 524, but it's only in leg C. So this is very good. and information services sector was I, uppercase I, and it's very hard. Is there 3 1s? Is there 3 L's? What is it? Okay, so it's I. There was another one that I wanted to, where was it? Oops. Oh, there. Basil, do you think, here we go. Basil, do you think the continued grind higher is really telling us a rate drop coming soon? Earnings and rates seem to be dominating the market ramp upward. So, WH, what I'm looking at here is, let me just show you something. So here's the TBT. This is the inversion of the yields. This is the yields, the inversion of the Lehman 20-year Treasury bond fund. It went to a peak E right there. It could even be an instant restart. I'll just call it an E for now. And it's sharply lower today, 36.19. That is the yield, 3.619. And if you're looking at the weekly chart, it looks like it wants to arch over. This is the yield. And if you're looking at the monthly chart, it looks like it's the same thing. It wants to make an arch pattern. I'll even draw it in. And if that's the case, yields will be coming down. However, one of the things I've been looking at, which says to me, just don't take it for granted that yields are going to come down. They might, but I can't really take it for granted right now, because if you're looking at, I can't even remember if this is still notated. Probably not. I couldn't even tell you how many hundreds of times I've notated junk. J&K, this is the S&P, this is a SPDR called the SPDR Bloomberg High Yield. So look at this. Here's the high yield right there, peak A. Up arrow. Make that the up arrow. Okay, here we go. So this is the J&K. This is the weekly chart A, peak B, peak C, and a peak D right there. So it's already gone to a D just above the 200-period moving average, and then it came back to the 200-period moving average. When the 9 and 14 cross decisively over the 200, treat that as a potential break to the upside, or if it's on the downside, it's a break to the downside. Now, the monthly chart, A, this is a lower A right there. That's a B. That's a C. And is that a D? No, that's not yet a D. Okay, so what I'm looking at here is that the junk bonds have had this is a major move from the April low at about 91 to where it is 97. This is like a stock. Doesn't look like some kind of a bond. So when I put that into the potpourri, I'm looking at it, I'm saying, to be able to get yields down with the Fed saying that it's going to come down, there is still so much uncertainty with the tariffs, especially now with the judicial ruling. I would just say that I think it's going to come down, but I don't think it's a layup. I just think it's going to be kind of tough. Now, let me show you this as we go to the break. Toll Brothers, look, Toll Brothers is still acting really well. It's acting as if rates were going to come down. Look at Lennar. Done very nicely, pulled back from a peak D, but it's still holding very well. And look at Builder, BLD, slightly different because they have the materials. It's done very nicely. Now it's pulling back. I'll talk about it when we return.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So I think that the answer has to be, as far as the yields are concerned, if the market is portending lower yields, it'll do that until it's dissuaded from that particular viewpoint. So as it stands right now, I think you're correct that the market is anticipating it. The way I'm looking at it, it's a work in progress. I haven't yet got the proof to say that that's going to happen, but yeah. The market is suggesting that. All right, here's another thing. A question came in about the GDX. Going to give parameters for the GDX. That's really hard. When you're at all-time highs, you can go even higher. But this is not all-time highs. This is a fraction underneath the 66.98 all-time high. The high today so far is 65.48. So we're getting really close to what I would call resistance. But you remember, the GDX, the gold miners, it doesn't know. He doesn't even know what it is. We know what it is. And it just will keep going up until the buyers are fading away and sellers come in. That's the way you have to look at it. There is something else going on geopolitically. I can't pinpoint it at this particular stage because it's a geopolitical thing, and you just never know. The evidence comes out later on, but my suspicion is that huge institutions, banks, etc., are already buying gold. So have a look at this. I'm going to squeeze this particular GDX chart closed. I used to have it going way, way back, but for some reason, TradeStation doesn't have it anymore going all the way back. So the last high I have is 66.98, and that was in September of 2011, exactly 14 years ago. In the interim, it's gone down to 12.40, then it rallied to 31, then down to 17, then up a little bit, and then down to 16, then to 45, down to about 21, and now it's trading at 3 times high at 65. So look at the way the MACD has expanded. And the histogram, the vertical lines, is still expanding. So that means it needs a little time to come down for the MACD to go negative. Look at the way the stochastic's at 91%. That is great. Look at the on-balance volume. It suggests that it's getting a little bit overbought. Now, let me do this here. I'll do this specially because it really is pertinent to everything that we're talking about. So when I go to this chart right here. So this is the... no, I didn't want that. I wanted this chart right here. Can I do this one? let's see. Yeah, I'll just go to this one right here. So look at this. So this is not the one that I really would normally use, but it's okay. So what I've done, I'm going to do is I'm going to go to the GDX and I'm going to show you something very interesting. Look at this line here. This is the daily chart. I'm going to put this in here to say every time that the GDX MACD has gone close or gone to this, it's been some kind of a top. Maybe it's a little bit of a top, but a top nevertheless. Look at this breakout to the all-time high. Look at the green 9-period exponential moving average. Oops, on balance volume, the green line right here. And look how green the 9-period moving average is. Look at the weekly chart. So I don't have, this is the same line right here, but it doesn't, only when it coincides, you get some kind of a pull, not a major pullback, but certainly a pretty steep pullback. And this one had, I'll go right there. I mean, that had a 1 month, this is a week, 1 week pullback, and then it made new highs. Now look at the monthly chart, and this is going to surprise you. I hope it surprises you. Yes. So have a look. Look at the process that this MACD, the moving average convergence divergence, had to make before it actually made that triple top. Look at this before it made that top right there. Look at this before it made that little top, and look at that before it had that much longer. It was about a 3-year actually pullback. And now you've done that again, and it did it very briefly for 2 months. It pulled back and it's gone up, and now you're retesting that. So everything about this chart on a monthly basis says that the technicals that I look at are suggesting that it's getting overbought, number one. Number two, you're getting to this previous all-time high in the GDX. So let me just go back to the daily chart and just go through this real quickly. Since we do have gold, which is the same, acting very well, it's not the same as the GDX, which is the gold minus. So you can see that this extension right here has a little bit of the characteristics of this slope on the upside of the MACD. And it coincides with a stochastic making little double tops. So everything about this is suggesting there should be some kind of a digestive phase in the GDX, but we don't have that yet. So let me go back to the real chart right here in the 3 time frames, the GDX, and let me explain. So you've got a little doji candle today with a high of 65.74, less than a point away from its previous, I'll call it the all-time high because I can't remember where the all-time high was, but it was that one that went back to 2011 in September. And look, the stochastic is at 97%. That's really good. On balance volume, the blue line is overbought. The MACD is still expanding. The histogram is still expanding. So it means that it'll have to be a process. And that process says I have to look at it on a weekly basis and say, roundabout in 3 weeks' time, in 3 weeks' time, I can't tell you where the price has turned from the high to the low. That's number one. But I can tell you that within context of the technicals that I'm looking at, this former resistance level, this inside channel repellent zone became a propellant zone. I would not be surprised if the GDX, the gold minus, sometime in a little later in September, comes back to test between, it's a rising trend line, so that rising trend line will be, say, 61, between 61 and 59. I hope that helps you. And so the whole thing about this, Mimi, is that you're asking me to please comment on the GDX, so I have to look at it both ways. And what it says is, if the GDX breaks to the upside decisively from here, then there's something geopolitically that's going on that you really have to be cognizant on. You have to be aware that this is abnormal, this is not usual, and therefore you want to be holding as long as possible. Now, the only thing I would say to you, you haven't asked me, but I'm going to say, if you're getting a little nervous and you feel you need to ask because every hour you're looking at it, it's getting closer and closer to the hour that you look at it, I'm just going to say, take a little bit off. Make yourself comfortable. If you're comfortable with your full position and you say, look, I'm looking, this is a longer term position, I'm happy as a clam, it can pull back, I might even add to it, that's one thing. But if you're saying, I love what it's doing right now, I don't really want to give up anything, then just give up a little bit as insurance. Just like we bought insurance on the S&P, which could easily get taken out. That's not the point. The point is we needed to have it because we have so many long positions, and we needed to know that we had some kind of a comfort zone, and in a way that's kind of giving us the comfort zone. So I hope that helps you. I'll be back for the final segment in a moment. And don't forget, check out my opening call, my daily newsletter. I think I think you should be satisfied because I really try to keep everyone for decades now. I try to run the Straits of Gibraltar without getting hit on the rocks. I'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, Basil Chapman, Tiger Conditions Hour, final 5 months. This is a really strong move in the 5-minute chart. Remember that 200 period moving average? I said before it was very strong support. It became support here, and it's running strongly. This is only an A. Should it go to B, C, and D? We'll see. I mean, this could be a single leg A to the upside. If it takes out 64.50, it's at 64.61 right now, but so far it's acting very well. So with that said, let me just do a couple of things here. So I did the GDX. So NAT, which is Nordic American tankers, gone to a leg D in the daily chart, D in the weekly chart, the monthly chart's improving. If Nordic NAT trading at 317.06 right now, if it's able to get to 326, then the 335 200 period moving average for the very first time in a long time becomes a magnet. So let's just watch that very closely. It's done very nicely. Next question came in is SMR. SMR is so familiar. Oh, New Scale Power Core. I was asked about this the other day, and it had this peak C1, C2, acts like a D, pull back very sharply to a lower low, almost did the same as the S&P right now. This is leg A and leg B. This is acting very well. Remember I said I was a little concerned to see how it would rally off the double bottom, and it's done that. So at 42.45, if it's able to tag 44.80, I'd like it to be 45, but let's just say 44.80 anytime this week, that'll be outstanding action. But in the meantime, what you want to look at is support is at 39. It's at 42.37. To one other thing we had going here. Yes, I'm thinking tomorrow I will do a whole bunch of these biotechs. I just had I think this is a biotech, RYAM. This is Rayonier Advanced Materials and Products. Supplies high purity cellulose liquid crystal displays. Food Farm mentioned this the other day, that stocks sometimes go from the bottom of a rectangle to the top. It's doing very nicely. Leg CDEF. Yeah, this is trading at $5.91. Hey, put this on your radio. It's right at the 200 period moving average.